Hello and welcome, everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com. This is Trading Places Live. It's Monday, January 9th, 2022, and I'm pre-recording this Trading Places Live for Tuesday, January 10th. Futures currently are looking to extend the afternoon selling. Let's see, at last check, we've got futures. Dow futures currently are down 82, S&P 500 futures down 11. NASDAQ futures down 43. And of course, we do have to, work our way overnight. Things can change overnight into the morning. The Federal Reserve Chief Jay Powell will be speaking at 9 a.m. That could impact futures and, of course, the way the market opens. So we will be checking on that. We'll have to obviously look and see how the market opens tomorrow. But let's go ahead and go through today's agenda. We will start off with the daily market recap, then talking technically. Going to look at reversing candles. We had a lot of reversals on Monday. We saw the market up in the morning, nice gap up, continued movement up, looked really good, and then mostly selling all afternoon. Finished down the NASDAQ, the Dow and the S&P 500. We're going to go through those indexes in just a minute, but both of those major indices finished down. The NASDAQ was the only one to finish in positive territory, and that one was close to being negative. So we're going to jump into that in just a minute. Then we go into earnings spotlight and the three you must see. We'll wrap it up with the three you must see. All right, turning your attention over to earningsbeats.com. If you are new to Earnings Beats, if you go to our homepage at earningsbeats.com, you can scroll down. You can sign up for our free Earnings Beats Digest newsletter. This is a 3 times a week newsletter, Mondays, Wednesdays, and Fridays. Normally just a couple paragraphs and a chart, so a very quick read. All it takes is a name and an email address. Hit that subscribe button, you'll be set up. No credit card required, and you can unsubscribe at any time. All right, let's take a look at what transpired on Monday. It was not a particularly good day considering how we finished. The Dow Jones Industrial Average finished down 113 points. S&P 500 down 3, NASDAQ up 66. Mid caps up a fraction of a point, small caps same, up a fraction of a point. All of this came on the heels, though, of some pretty good action in the morning. And then, I don't know, we just kind of, things turned around, and there was a lot of selling in the afternoon. We finished down close to our lows of the day across our major indices. And as we look across the sectors, you can see technology did have a good day. It was nice to see technology do well, up 1.16%. But you can see we got up to the 50-day, failed, came back down and closed almost right on the 20-day. So it was good action early, but the afternoon not very good. Utilities finished up about 0.2%. Materials up a little bit more than 0.6%. To the downside, we had healthcare. Healthcare, the XLV was down 1 2/3%. And we finished at the lowest level we've seen in about 7 weeks or so on the XLV. So it was really, really poor finish. We closed back below both the 50-day and the 20-day on the XLV. So not a very good finish there. Staples finished at 75.04. So we did hold on to both of the key moving averages. But again, big reversal off of that earlier high. Moving on to the 10-year Treasury yield. Yields are dropping. You would think that would be good for valuations, but at this point, not so much. Recently, we got up to about that 3.90 level. Now we're back down to 351. Keep in mind, it was just about a month ago that we hit the lows down at 3.40%. So another 12 basis points or so, and we will be at new 10-year Treasury lows, at least looking back to where we were back, say, in the first 2 weeks of September, we'd gone up to about 3.4%. And then once we went through that, of course, we made it our way all the way back down to 3.40. And now threatening, getting closer and closer to that key area of support on the 10-year Treasury yield. All right, let's move on to talking technically. S&P 500, you know, as we go through, 3,900 has been a pretty big level for the S&P for the last several months. And so if we just kind of drag this up, you'll see that 3,900 level right there. So I don't even know how many times it's been now, but it's been a lot where we've either held on the way down, held 3,900 as support, and then fell through. And then we would move back up, and we've struggled to get back through 3,900 to the upside. But you can see this has been a pretty key pivot area, and that's what makes the action on Monday a little bit more discouraging in the near term, because it looked like we had moved up and had pierced through that 3,900 level. We got as high as 3,950. Pretty big move through 3,900, and then we came back down, closed at 3,892, 3 points below the 3,895 close that we had on Friday. So big reversal. I don't like to see that happen, especially at a moving average and a key resistance area. So I would say the odds are greater that we will go lower. But again, with Fed Chief Powell speaking in the morning, we're just going to have to kind of play it by ear and see how we start the day and then kind of go from there. Also, I wanted to go through and show you the hourly chart on the S&P 500. So let's again keep in mind that key pivot area is at 3,900, which is right there. Here were a couple of tops you can see, couldn't get through. Then we finally went through. Then we were holding 3,900 for a while. Then we break back down. Look, we fail there, get up close, fail there. And then today, it looked like, or on Monday, looked like we were making our way through pretty easily. And the selling in the afternoon took us right back down below. Now, if there was one bit of silver lining, we did hold just above the 20-hour EMA, which is at 38.86. So that was about 6 points lower. But we'll see what happens with futures. I mean, overnight, we could see a gap down in the morning and possibly lose that 38.86 moving average. But that all remains to be seen. Again, we'll be looking at that on Tuesday morning. I wanted to also bring up the QQQ, which tracks the NASDAQ 100, because what I'm seeing here on this move to downside is a possible short-term, I mean, we're talking about an hourly chart, but possibly a short-term bottoming head and shoulder pattern. But it's going to take some work. Let's go ahead and annotate this for you. So right about here, you can see we have a upsloping. Whoops, it's not the one I wanted. We have an upsloping neckline, which I like. And then potentially, maybe what we could look for is an upsloping shoulder. So maybe something like that. Now, keep in mind, right around the 268.70, I think it was 268.76 is where we had closed on Friday, and we gapped up from that level. So if we go back down and fill that gap to 268.76, that also will go just a little bit below that 20-hour EMA. But just kind of watch this, because potentially we could be coming down, putting in the left shoulder neckline. Then we've got the head down here. Another move up, put in an upsloping right side of the neckline. If we could maybe, even if we do start off a little bit weak on Tuesday morning, we could maybe just print a reverse right shoulder, and then a break back out above 275, 276 would be bullish on the QQQ. Don't know if we're going to do all that. I'm just pointing out the pattern. We'll see whether or not that continues, if that pattern stays intact at the open tomorrow. All right, let's move on. I want to talk a little bit about reversing candles, because they were everywhere yesterday. I mean, just looking at the daily chart on the QQQ, and I'll shorten this. Let's just look at the last 3 months. But you can see right there, that's the shooting star, almost like a gravestone doji. But as you move higher here off the recent low from last week, had an uptrend in play, and I don't like to see that kind of a reversal, especially when we had that 20-day moving average taken out very easily, and then we come back down below it or to it. Still got a little bit of downside left down to 270.39. So that's another 0.15 to get down there. But again, we could even have a gap down in the morning and easily move back down. Normally, when I see that kind of candle, I do expect lower prices. So we'll see what happens. All right, so let's look at some of these reversing candles. I'm going to go through a number of individual stocks with you. And so give you an idea of, what you might expect on some of these individual charts. So Bank of America, if you look down below, Bank of America has not been a very good relative performer versus the bank index. And banks have been just kind of so-so, a lot of chop in the banking area. But Bank of America has not been a leader and is much closer to a 52-week low than a 52-week high. You can see all the volume here at the beginning of December on the selling. And then we've gone up. We had a little bit of a shooting star already last week as we failed to get through the 50-day and we reversed back down. And then on Monday, we had a reversing bearish engulfing candle off of this uptrend at the 50-day, still trying to hold on to the 20-day. But with that reversing candle in play, if we do move back down below the 20-day, it could start and trigger another sell-off in Bank of America. How about Wells Fargo, WFC? Pretty much the same thing, maybe not even quite as strong as Bank of America. Reversing candle, bearish engulfing, sitting almost right on the 20-day moving average, 6 cents above it. Volume was picking up, and you can see the bank index again, just kind of choppy down here. And Wells Fargo has been losing relative strength for the past 2 months or so. So the chart doesn't look good, and I don't like that reversal there. How about Bristol Myers? Well, here we were going down, went up, failed at the 20-day, and look at that big reversal, putting in a new low close dating back in October. So this doesn't look good. The volume picked up on that reversal. It looks to me like Bristol Myers is starting another downtrend. Then we've got Merck and Company. Now, Merck looks much better. Here you've got a big move up in the AD line. Prices have been looking good, but I have a feeling if we get rid of that AD line and put in the PPO, I think we're going to see a negative divergence. And there it is. Higher prices, lower PPO, reversing candle, failure to hold the 20. I think we're going to go down to about 106, 106.5. And then we'll see what happens to Merck from there. All right, Raytheon, RTX. Another one that I think looks pretty weak in terms of divergence. Look at the price action. Higher. PPO's been coming down for quite a while. So Raytheon made a big move, but it looks like it's losing some momentum. I would suspect that we'll get down to at least the 50, maybe these recent lows. So I'm going to say somewhere between 96, 98 is where maybe I would look for a reversal on Raytheon. VIPS. So this is VIP Shop. VIP Shop, negative divergence, higher prices, lower PPO, bearish engulfing candle. Hasn't lost any major support though. So this one may go down to 14 and kind of challenge that area, which would still be, what, 6% or so from where we are. But I don't see anything yet that suggests we're going to go back to that 50-day. If we fail to hold the 20-day, then I think that opens that up. Progressive, PGR. This one actually looks pretty good to me. Even though it is a reversing candle off an uptrend, I wouldn't be surprised to see a little bit of weakness, further weakness. But I actually think 129, 130 is likely to hold here on Progressive. Right. The PPO looks good. And you might say, well, what, higher prices, lower PPO. Well, when I get a 50-day test and I get a center line test, I start the process over again. I don't go back before a center line test. So the analogy I give a lot of times is think about a baseball series, 3-game series, where you got the first game, team wins 10-0. When you come out the second game, you don't start again at 10-0. You start back at 0-0. When you get to the PPO center line, to me, that's when the ball game is starting again, 0-0. So I don't care what happened back here anymore. So we do have a reversing candle, which we have to certainly pay attention to. But I think a move back down to that 20-day moving average would be pretty interesting for me. How about BMRN? Now, this one, you do have a breakout. You do have a negative divergence and a reversing candle where you failed to hold the breakout and on pretty good volume. So BMRN, I would be a little bit more bearish on. Becton Dickinson, BDX. This one had a slightly higher, we had higher closes, lower PPO, really bearish candle. This is one I think could go down to the low 240s. Jacobs Engineering, ticker symbol J. Breakout, PPO looks good. Reversing candle, watch the 20-day. I like this one on the 20-day. Then we've got the XBI. Now this one, this is a bearish engulfing candle, but there's no real uptrend. We've been going sideways for a while. So I just look at this as being a little choppy, not really any direction. That candle, while I'm not a big fan of big red candles, this doesn't look like a major reversal because there's no trend to reverse. Kind of a similar thing going on with lows here. LOW had a nice little move to the upside early. We reversed, but really the last 2 or 3 weeks have been sideways. So I'm just not really seeing anything there. And then General Dynamics, same thing. So technically, these are bearish engulfing candles. They are reversing candles, but you have to have a trend to reverse. So when I see a candle like this in the middle of a range, I think it's probably just something you can ignore. Now, those were bearish engulfing candles. Let me show you some shooting stars. So a shooting star is where you gap up, you trade higher intraday, and then you leave that long tail and come back down and close at or near the low. So match, and this one, it's been such a poor performer, and now it's failing at the 50-day with a tail above it. That doesn't look very good. It reminds me of something like this back in June. Moving up, looks like you got the breakout intraday and you fail. And then look at the next 3 days. I'm not saying that's going to happen, but I do think it increases the odds. Rite Aid, RAD, I don't like this. We move up, test overhead price resistance, test the 20-day, and we fail, come back down. This one looks like it could have further to go. Then we got Sealed Air Corp. This one moves up, looks like it was trying to make a breakout here. Fails, comes back down. I like the PPO. I think maybe we have a little bit of a cup here. So maybe we get a handle that goes back down the 20-day. Then we've got Solar Edge Technologies. This is trending below its 20-day. Look at the failure here at the beginning of the year. Another failure on Monday. This does not have a good look to it right now. That PPO has gone negative. We had that negative divergence. There's your lower PPO, higher price. And we went back to the 50-day. We went back to the center line, so we've reset. I think you want to be careful if you close below this red candle right here, which, let me give you the number there. The close 275.84. So close below that level would really make this chart much more bearish to me. All right, PWR. This is Quanta Services. Another one that appears to be trending lower. 20s cross below the 50. The PPO's weak. We go up and we fail at the 20 and roll over. This looks like it wants to go lower, and you would get confirmation of that on a close back down below 135.57. Now, one shooting star that I didn't really think meant much was Adobe. Again, sideways action, not really any kind of a trend. No false breakout. We started above the 20, which is above the 50, and we ended that way. So I'm just not seeing anything that really suggests big reversal. Now, this is not a good looking chart, so we could certainly reverse, but I wouldn't use that candle as the reason to short the stock if you were thinking about shorting it. All right, let's move on to earnings. What I want to do here first is just show you this spreadsheet. This is what I did last quarter. So we have two upcoming webinars. We do we'll do a Q4 earnings sneak preview, which is a free event. So anybody, it's a public webinar. Anybody can come into it. And I'll be talking about that more as we get closer. It's next Monday, January 16th. Excuse me. So that'll be right after the close next Monday. And then the following week, I'll do a Q4 earnings for members of Earnings Beats. And you just have to be a trial member to come in for that. But this is what I did for that main event for our members last quarter. And what I did was I looked ahead to 125 companies. And I set basically up two buckets. I put the charts that I thought looked positive into this positive bucket. There were 68 companies. These were companies that I thought would have strong results. Revenues, earnings per share. I thought that management would come out with some pretty good numbers just based on the way these stocks were trading heading into earnings. And then I came down and I did negative, the ones I thought might struggle. And you can probably see a lot more red on these. See all that red, all those missed estimates? A lot more than what we see up here. And I think relative strength gives us a lot of clues heading into earnings reports as to what you might expect. I would not hold a stock into earnings that is downtrending relative to its peers. I just wouldn't. I think Wall Street's sending you a signal, beating you over the head. They go out and they talk to companies within all these different industry groups. And if one stock's leading the industry group and the other one's lagging, I think that's a pretty good indication that maybe one will beat, one won't. But of these 68 companies that I had here, 57 of them beat revenue, 54 beat earnings out of 68. It's pretty strong. Of the 57 negative, 27 beat on revenues, 37 beat on earnings out of 57. Less than half beat on revenues, and less than 2/3 beat on earnings per share. And then you go up here, 57 out of 67. That's somewhere around 85, 86% beat on revenues. And probably 80% or thereabouts beat on earnings. So anyway, I thought this exercise was interesting because statistically, I think it gives you a much better chance to find companies that are going to report strong earnings by looking at their relative strength. So let me show you some of these that I had on the positive and the negative list last quarter. So see Calix Networks, the big gap up there from this sideways action. Look at the relative strength here heading into earnings. This is CALX relative to computer services, to the industry group. Very, very strong looking stock. Great volume trends. And what happens? They beat top and bottom line and they gapped higher. Another one that was on that positive list was AGYS. Stock moving up, relative strength picking up, volume picking up, and there was your gap up with earnings. Next, Wingstop. Prices going higher. Look at Wingstop relative to the restaurant group. And then look at what restaurant group's been doing relative to the S&P 500. So Wingstop is a leading stock within a leading industry group. And that was the earnings. Look at the gap up. It's actually come back down and tested gap support, starting to move back up again. I think this is one that might run into its earnings report. A fourth one that was on the positive list is Impinj, PI. Check this out. Look at that relative strength. Big volume. Look at the gap up. This one gapped up from 90 and finished over 115 the next day. Again, pay attention to relative strength. Now, here are three that didn't pan out. All three of these missed earnings and missed revenues. Meta Platforms. Price action going lower. Relative strength going lower. And there's your gap down. AMED, Amedisys. Relative strength going down. Look at the group going up relative to the S&P 500. But AMED was not going up with it. It was one of the weaker stocks in the space. They missed on top line, missed on bottom line. Look at the gap down with earnings. And then finally, WST. Look at the stock trending down relative to medical supplies. What happens? Big gap down with earnings. Heavy volume, heaviest volume of the year. Wall Street was already getting out. Look at the signals. All right, let's move on to the three you must see, and then we're going to wrap this up. Going to start with the Dow, with Dow Holdings. I like this breakout, but that tail, I wouldn't be surprised to see a little pullback short term. But look at the AD line really beginning to strengthen. Volume picking up. You can see that the group started moving down here, and then also Dow Holdings moving on a relative basis. I think stock looks good. It's just a little stretched, and we did sell off late in the day. Next up, Visa. There's your cup off of an uptrend. False breakout. This one I could have talked about earlier with the reversing candles. That's a shooting star candle. Looks like an upside down hammer. False breakout, close back down below. I think we're probably going to see some short-term weakness here, but that's probably going to be a handle that will precede the next move higher, in my opinion. And then the last one I have for you is Apple. Look at Apple moving up, failing at the 20-day moving average and coming back down to the low. I don't know. It doesn't look very good to me. I would expect a little bit of weakness in the near term out of Apple. All right, that's it for me. I appreciate everybody tuning in. I'll be back on Wednesday morning over at Earnings Beats for your next Trading Places Live. Happy trading, everybody.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.